All right. First and foremost, Vicky, are you a believer, not an agreeer, a believer in the Santa Claus rally?
I think so, but the last 2 years we've had a really nice rally. Even though Santa Claus didn't come to Wall Street, we still saw some nice rallies in here. I think the January barometer, the first 5 trading days, January effect, all of it combined can be very powerful. I'm not going to panic if Santa doesn't come to Wall Street. I'm expecting really like trading volumes. I think it's still in the cards and we could see it. We're just going to have to see. People tend to go on vacation around New Year's Eve, so we may not see trading volume pick up until Friday and Monday, Tuesday next week, and that'll make or break it.
All right. You generally, based on tone, you sound a bit bullish right now, but I'm looking at your word of the day. It's turbulence. That doesn't sound very bullish to me. So what turbulence are you looking at?
Yeah, I'm kind of buckle up, Buttercup. I think 2026 is going to be a little bit harder. I think you're going to see a lot more volatility. Historically, the midterm year, the second year of the presidential cycle gets a little bit rockier, right? A little bit harder. Some of this easy money's been made. This rally's been great. Now we're looking at a little bit higher quality, a little bit more value in your portfolio, a little bit more anchored to wayward, because historically this has been the toughest year of a presidential cycle. A little bit harder. We're still thinking it's going to be positive. I mean, heck, all of Wall Street thinks 2026 is going to be positive. We just think it's going to be harder, a lot more volatile. You're going to have to be able to gird your loins a little bit, brace for a little bit of bumps along the road here, and be ready for some turbulence, but don't panic and hit the eject lever. Just maybe lean into a little quality and blue chips.
All right. Speaking of turbulence, I know you're watching the metals market because your pick first today is Rio Tinto, big copper producer. How do you game out that company based on some of the volatility in the metals market, specifically with copper and silver and all these other things? Does it change your view of the stock with the potential for more volatility going into the new year?
It doesn't for me, because Rio to me is a long-term hold. I'm less trading this, buy that. It's less volatile than the silver and gold markets have been. Yes, copper's hitting all-time highs, but to me, Rio is where everything's going to be built off of. They are a massive player in iron ore, in aluminum, in copper, and now in lithium with their acquisition of the Argentinian mines down there. So they're a player in every place you want to be for everything that's happening in the U.S., either AI, the electrification, all of the upgrades to our grids, all of the data centers we're building. It's going to be built off the metals that we need, and they have a wonderful asset base. So this isn't just the short-term play on gold and silver prices are spiking or copper prices are spiking. I'm saying this is a company you want to own. It's up 38% year to date, which is actually very mild for a metals and mining stock, right? It's an industrial play, not a precious metals play, and they have a great dividend yield, solid. They're not expensive. They're about 12.5 PE, 3.86% dividend yield, great free cash flow, wonderful assets, disciplined approach, and they're continuing to build where we think you need to be in this market as more countries look to secure their metal supply. They say, we need copper. Well, guess what? In the U.S., they're the owner of the Resolution copper mine. They've got copper assets. They've got aluminum assets. They've got lithium assets. They're building into lithium. And as we've seen metals production kind of deplete, more and more is going to depend on companies like Rio being able to step in there.
All right. One other company you're looking at is Berkshire Hathaway. We were actually talking about that stock yesterday. We had a guest on that said that they believe that all the good that Greg Abel is going to do as he replaces Warren Buffett isn't priced into the stock, and this is a buying opportunity. Do you agree with that idea that Greg Abel, with that big war chest they have, over $300 billion, there's more upside in the name despite the sell-off and the loss of what you're even calling the Buffett premium?
Sure, yeah, no more Buffett premium. That's fine. I believe in Greg Abel, and I believe in how Warren set him up. Look at how much cash and cash equivalents they have on their balance sheet. I think it's like $380 billion in cash. He has the ability to go buy companies without tearing down or destroying what Warren built, right? So he's got a war chest. He can go out there. He's a little bit younger, a little bit different perspective on the world than what Warren had the last 10 years.